Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Joe Kizis. He's the president of EQTY Metals. This is a new BC exploration play, but I've known Joe for a long time. He's been associated with a number of companies that I've covered in the past. And so he's got a new high-grade story in BC that he's working on, and he's here to tell us about it. I've got questions, Joe, but why don't you go ahead and give us the overview?
Sure. This was an opportunity that was brought to us as a small company that was trying to make a small high-grade vein mine out of one of their deposits. They also had some other very interesting projects, diamonds in the Northwest Territories. They had a royalty on a property in the Greenwood Gold Copper District. And so it looked like an opportunity that we should investigate as potentially a bigger story than a small high-grade vein mine. And so basically that's what we've done. We've taken over the management of the company. It's got a very small market cap at this point. It's about $1.5 million, as the market cap for the company. And so we took over in, let's see, I guess it was September. And so, in that time, we've had to do some modifications of permits, and we've created some databases to look at the geology of the primary property, which is the Silver Queen project in northwestern British Columbia. So we're focusing on the Silver Queen. Our thought was that that's where the majority of the value at this time is in the company. And at that time, there were thoughts that the veins, the narrow veins, were just narrow veins, and that was what the previous company was trying to develop as a small mine. Well, juniors, there's no real reason for a development of a small mine unless you're, not if you're a public company anyway, or at least that's our thought. They had also intercepted a few years ago a porphyry system, completely blind at the surface, farther to the southeast. And again, the thought was, well, there's another system there and totally unrelated. I'm always suspicious when somebody says there's two different systems and they're unrelated. So we developed a 3D model, and as we started spinning that around, one thing that you can do that's very effective with porphyry systems in particular is the surface area or the upper portions of porphyries often have very high grade veins. So are those previous veins, are they something that was part of the porphyry system, which would indicate a lot more potential for the property than just those particular veins that have already been discovered. Now, when you look at the region, it's part of what's called the Skeena Arch. There are a number of big porphyry systems there. There are a number of large companies in the area, Centerra, Teck to the north of us, Centerra's to the southwest, Imperial Metals to the southwest. So they're looking at porphyry systems. To the east of us, though, Newmont has a property that's what's the name of it's the silver, God, okay, brain.
It's all good.
Yeah. So, all right. Well, anyway, it's
Silver Hope.
The
That's
property to the east.
Silver Hope.
What's that?
It's Silver Hope, I think.
No, it's the.
That's what it says on the map.
Silver. EQTY Silver, sorry. Yeah, just brain freeze there for a moment.
No worries.
Yeah. At any rate, it appears that the level of erosion is different throughout the belt there, right? So it's a well-mineralized belt. There are varying amounts of erosion. So the question then came up is, are these veins something that are related to the porphyry system? Now, if they are related to the porphyry system, it's not just the one vein that already has the resource developed on it. So, that's when we modeled everything in 3 dimensions and then rotate that in 3D. What we can look as we look down the vein is we can see that those veins are flexures. Now that has an effect on where the high grade gold is. And so our initial drilling project is basically drilling below some of the past mined areas and where some of the resource remains, because it's still open at depth. The old timers were basically looking for shallow vein material that they could mine easily. Well, that extends quite a bit more at depth. When we put in the take the view of how those veins relate to the porphyry as it's been drilled. It's not been totally drilled out, but what we can see is that it is in the part of what would be a typical vein porphyry system. That's where the high grade gold and silver would be. So, it looks like it's part of the same system. I think there's not only potential on the existing veins where the resources are, but on a number of the veins that are just basically little scabs at the surface that haven't been drilled yet. So I think there's a lot of upside to the property. And so our initial drilling program is a fairly limited area of the system, basically offsetting some of the high grade to demonstrate that it continues at depth. That's approximately $1 million drilling program. But we have a lot of other sort of follow-up programs that are basically in place. We've just, we are very close to getting our permit for the drilling, and that would include the initial program as well as some extensive drilling as we expand the program. So it's a 5-year program. We just submitted the bond money last week, and so we got confirmation of that even as of this morning, and we're hoping to get the permit within the next few weeks. So that's kind of the the overview for Silver Queen. We also have some diamond projects. So this company had a lot of things in the works. They're pretty interesting projects. We're not really diamond experts, and so we've had to learn quite a bit about diamonds recently. These are pretty interesting because there are actually a lot of kimberlites on it. It's not very far. If you took a triangle between the two producing diamond mines in the Northwest Territories, Diavik and the other project that kind of slips my mind right now as I'm trying to think and talk at the same time. But basically there's something like 18 different kimberlites that have diamonds in them. They're fairly small, but there's quite a few of them. Diamonds are complicated because they're the large amount of value comes from a very small amount of material, and small diamonds, right? So you get a lot of diamonds, only a few of them make up a lot of the profit. It's something that we'll hold on to. The mines in that part of the Northern Territories are running out of ore over the next several years, so we expect that there'll be some value in the company from those, but we're really not putting much effort into those right now, maintaining them, there is a camp at one of the sites. So we're kind of putting these other things that were part of the company on the shelf. We're focusing our attention exclusively now on Silver Queen.
Okay, well let me jump in and we'll work. You said a lot there, and there's several things to parse out. You've answered some of the questions I was going to ask already, but we'll get to that. Let's start actually with the last thing first, just because I think it's easy to encapsulate. Basically, you're not monetizing these assets already. You're banking them for future monetization because that's not your specialty. Is that fair?
That's fair. That's right. Same thing with the royalty. I think there's some value there. That part of the Greenwood district has already had significant production, over 1 million ounces of gold and a significant amount of copper. Those are skarns, and there are a number of juniors that are active in the area. That will have some value. To monetize it now, this far from production, it's hardly worth it, really. So, it's another asset we put aside, and we'll focus on Silver Queen.
Okay, I'm actually glad to hear you say that, because I looked over the presentation. It's like diamonds.
Yeah.
I mean, if that's your business, that's one thing. But as that makes sense. Okay. And I'm also, it's good to get the back history of taking over the company, change of management, change of plan, focus on a new thing. But to sort of make sure I have the thesis right, the primary thesis you're exploring is that these veins are distal to the porphyry, and the porphyry is the main target, or are you thinking they connect to the porphyry and therefore continuing to connect the dots is the target, or what is it exactly that you wish to show with this thesis of the veins being related to the porphyry?
Yeah, the porphyry itself is typical of BC porphyry system. They're not real high grade compared to parts of Chile and Iran and places like that. So they're not a first level priority for us. The veins are really the first level priority. So the difference being related to the porphyry is that the porphyry will throw off a lot of veins, and there are a number of examples around the world where there's significant precious metal mineralization surrounding the porphyry itself, and so that's the main focus. I think what it does is it indicates that this is not just a little vein system that's off in the middle of nowhere in British Columbia. This is if it is in fact related to the porphyry, and certainly the evidence shows it. There are a lot of veins, something like 28 veins on the project. Most of them have had no or little drilling. So, the other advantage in these porphyry systems is that they're usually typically very well zoned. So you can tell where you are in the system, and if you're above the system, even though the veins may be barren, you can work your way down into the precious metal rich part of the system. When you're getting near the bottom of the system, because maybe base metals are different, the alteration minerals are different. So I like these kind of systems because it's not just blind drilling and outlining mineralization until you run out of it. You can use some science and try to predict where you are. We had actually pretty good success with this at Homestake. We found some blind deposits because we knew we were above gold mineralization in those type of systems. Again, very similar polymetallic deposits. We also knew when we were below mineralization. We had some really high intercepts at surface. We drilled under it and we're in base metals with very little gold. But then we found a downdrop part of that same system, and that's how we discovered one of the deposits at Homestake.
Actually, I remember that. Okay, so then the difference between what you're doing and what previous management doing is really, it's a more regional understanding. Instead of just poking at the existing resource, you're trying to find more of the same related to this porphyry system. Is that fair?
Yeah, that's fair, and I think it's a process. So the first stage is to extend the zones of mineralization that are just, they're wide open, right? That's originally what caught our attention of the project. But as we understand that system and how it changes with depth, that allows us to go to certain areas. Like, for example, the main resource is along the number 3 vein. But it's also along a particular flexure in that vein, and that's not obvious from surface mapping because there's just not full exposure. When you put all that information in 3D, rotate it, you can see that flexure. And that's where the thickest gold values are and the highest gold values. So, understanding those features, we're going to shoot some holes right into the plunge of that mineralization and hopefully extend that thicker zone, because there's a lot of intercepts that are somewhat thin, but the thickest part of the veins are really where the money is going to be made. And so if we can understand where those flexures are, or intersection of veins, or proximity to the porphyry, those are what will help us for the second and third phase of drilling when we start finding these new discoveries. We know, for example, on the north end of that number 3 vein, the gold apparently drops off. Well, it turns out there's not much gold sampling up there. That was done when they were looking for silver and base metals. And those companies were just not that interested in gold when gold was, $38 or whatever it was at the time.
That's interesting. All right, so let's talk a little bit. I don't want to get too technical here, but let's talk a little bit about the mineralization, because I looked at the resource estimate put out, and I mentioned earlier, high grade, and it looks high grade, gold equivalent or silver equivalent, but it's polymetallic with quite a bit of different metals in the mix there. So I'm wondering how you calculated those equivalents. Was it just based on price, or did you look at different recoveries? Because you're never going to get all of those metals out equally of something like that.
Right. No, that's exactly right. It's a polymetallic ore, and when you look at the actual intercepts, this is one of the reasons for looking at the vein and the specific part of the deposit. Because when you look at a resource, you're lumping everything together, so it doesn't look as good. In our last news release, we put out just the gold times the thickness, and you'll see where that flexure is, because that's where the thickest high grade gold is. There's half ounce gold in that zone. So we want to follow that. We want to follow those those features. So the way we did the resource and the gold equivalent is there is a fair amount of metallurgy that was done, and depending on who did it and where they took their samples, it looks like good work. We've had an outside metallurgist take a look at it. He said, "Yeah, this is quite good." Obviously, they didn't know exactly where the samples came from, so there's additional work that needs to be done to verify it. But they came up with values of 72 to 83% overall for gold, for example. So we use the recovered values when we do the exchange. It's not just a straightforward, gold and silver price, because obviously you get different recoveries and different of those. When you look at the gold equivalent, about a third of that is the gold equivalent grade, for example. About a third of that is gold alone. About 25% is silver alone, and then the remainder is mostly zinc with some copper and some lead. Polymetallic veins, they require a lot of metallurgy.
Sure. No, but I'm glad to hear you say that. It sounds like you've gone at it in a responsible way, because I mean, we don't need to beat that to death. You know how it is. It's easy to hype a number, but you're never going to get that actual recovery. And if we look at like just the gold itself in that resource, it's plus or minus 3 grams, which for a vein underground mining situation, okay, you also may have plus or minus 200 grams of silver. That might work in Mexico in a low-cost environment, but up in BC, it looks, a little thin. But what I'm hearing from you is that's the average, and the goal is to look for the plunges of thicker, higher, more economic grade zones, and to find a lot more of those. Hopefully, is that a fair way to put it?
Exactly. That's exactly right. I mean, there's no real reason, for a junior explorer that wants to hand this project over to a mining company to look for a small mine, right? So, the high grade, where's the money going to be made? It's going to be made in the high grade. And, one of the techniques we do is we turn off all the low grade noise, basically, when we're modeling this in 3 dimensions. We try to trace out what are the controls for that high grade. And that's where that flexure suddenly shows up. And, if that is the case, a lot of these veins, I mean, you get the repetition of what makes ore and what makes, the product. Right. That's what we really want to know at this point.
Okay, so you're getting into my next question then. You have a forward-looking statement on your corporate presentation saying that your goal is to shoot for 1.5 million ounces. You only have a few 100,000 now, so that's based on finding more of these shoots within these veins and finding more veins related to, I mean, what do you base that on? That's a pretty ambitious target.
Yeah. Well, again, it's a target, but it's based on how much of the previous drilling is basically ended because there's no drilling, and the geologic projection of doubling those type of features. So there are a number of high grade zones here that are really under drilled, and so that's that's the goal is to drill those holes out, and at least in a sort of a inferred category to add those kind of ounces, because we really need to show that it's going to be bigger than the size that we have right now. It's a good maiden resource, but it's wide open in a number of places. And our goal for the first round of drilling is to demonstrate that, there's continuity of those high-grade portions that we can, then further build upon, and then start looking for other areas.
All right. So, okay, this begins to address some of the other questions I have. On that presentation, you show a projected phased exploration budget ranging from $3 to $4 million. You only raised $1 million last fall to get going. So clearly, you have to have a phase 1/2 or something to get started, and that's what you're talking about. You're going to confirm or look to not just twin, but you're going to look to step out or step below known sources, show that it's bigger, and then hopefully based on that raise money at higher prices to go after the rest. Is that right?
Yeah, that's right. We're looking at evaluating doing a financing now. Flow through financing in British Columbia is pretty attractive, and so that's part of what we're evaluating right now.
That might scare me more if you already had an Australian-style share structure with hundreds of thousands of shares out. So it's a good thing that you have a nice tight share structure and you can do that. I assume there was a rollback or something in the past. But so that's feasible. But at the same time, I mean, there's risk of dilution at this point. Why not go ahead, if you're confident in these targets, why not go ahead and drill those first and then raise money?
Well, I mean, taking over the company required some expenditures. A lot of the permits were expiring, so we've had to do actually quite a bit of cleanup on things. I mean, nothing was out of line, but it's typical when you take over a company and clean it up. We've had to put in a fair amount of increase in bonding at both Silver Queen and Monument. There was some cleanup that was required. We'll get some of that money back, but you need to run the company as well.
All right. Okay. Fair enough. I understand. Then I guess the other thing, and you may hate me for asking this, but I have to ask. I look at the stock chart, and it's, what's the expression? Scary. I mean, it trades by appointment. How do you raise money in that environment, and how do you tell investors that if they buy in, that they'll be able to have the liquidity to trade or get out if there's bad news or whatever? Can you help me understand, as a potential investor, how my money is safe investing in your stock at this time with those constraints?
Yeah, well, we have done zero promotion at this point, right, to tell our story, because, well, we're still developing the idea and the story. So, obviously we need to start doing that. We need to start telling our story so we can get the price up to a reasonable level. Most of the groups that came into it understood that, this was what we were doing. We're taking over this company with an asset that we thought was worth developing and, telling the story on the company. I mean, there's a market cap of what, $1.5 million right now. That's a micro cap. You couldn't put these projects together for that, right? So, the question is, what's the value of the company if we're successful in adding these and bringing it up to, million ounces, over a pretty short period of time, which, seems like can be done. So, yeah, I guess that's my answer to that question, is that, you've got a very small capitalization of the company. There aren't that many shares out, and once we start telling the story, we're hoping that the market will appreciate the upside on this. It is exploration.
It is. I get it, and thank you for kudos for pointing that out. But I guess it's a reasonable counterbalancing. Okay, there's risk here from the liquidity. On the other hand, it's not a micro cap. It's like a nano cap or a pico cap. If you actually do hit, then I don't want to make an arm-waving statement about what happens if you hit. But I understand the trade-off there. That is an interesting answer. All right. Well, I had other questions about the deposit, but since the thesis right now is really one of extending and looking for more of these, I think it's a little premature. I just mentioned, I think, given that polymetallic nature of it, at some point you probably want to look at a PEA, even if it's premature, you're not even thinking about building a mine yet, but at least if you ran some economic numbers on what you have, then people will be able to have some confidence, well, this is worth mining. Like if I look at that polymetallic spread across all those different metals and the average grade of the gold and silver underground, I wonder, well, is it worth finding any more of this? So a preliminary assessment would answer that and maybe help the market value whatever you do find better. Of course, unless you get a smoking hot hole, that's a different story. But
sure. So, well, the other thing is that the metal ratios and things. I mean, it's pretty similar to the Silvertip, discovery that Core bought for what, $250 million. So, I guess there are examples of these type of deposits that are pretty attractive. The polymetallic nature of any ore makes it a challenge. So, particularly when you're looking for partners, there are certain groups that will handle those well. So, Core, I just mentioned, is one group that, can do that. Hecla, a lot of the larger companies can do that as well.
All right, fair enough. Okay, so the one question I have left then is the one I have to ask everybody, and that's the skin in the game question, Joe. Did you get a bunch of free stock here, or did you put any of your own hard-earned money into this play, and how much?
Yeah, I did. Yeah, I did a little bit, not a lot. I have, 125,000 shares that I purchased in the last financing. There are warrants associated with that 1-to-1, and then have options at about 250,000 shares, something like that. So, not a huge amount, but again, we've taken over this company, and a lot of the original work that we did, we never charged for. We're finding out whether the project is here. We're invoicing minimally at this point, and so, we're trying to make this project go.
So you're building sweat equity.
There's a lot of sweat equity and a little bit of hard cash equity as well. But.
All right. So I said that was the last question, but then just sort of to wrap this up, you're looking at flow-through funding, and then you drill, presumably post-COVID shutdowns and so on. Do you have an expectation for when you might actually get to drill, and when we'll get to see the first real test of your thesis?
Yeah. Well, like I said, we just have the permit right now. It's been accepted. We have a bond that it's been agreed upon. We posted that money last week. We got a note this morning saying it's going to be a couple of weeks before all the paperwork is done. Once that's up and running, then we'll do a quick financing with people that have already mentioned that they have some interest, and we're hoping to be drilling this summer.
All right. Okay. Sorry, I keep thinking one more then. If you have people already interested, that's good that you know that you have some money willing to back you as you test this. Would this then likely be a bought deal, or would there be room for retail investors?
No, it would be. I mean, a lot of the Mannix company is, a lot of the groups are heavily invested with retail. So yeah, it would be open and available. The flow through is attractive. We'll do a portion of it as hard as well, just to bring the coffers up so that we don't run out of money as well. So yeah, we'll be looking to raise money from
all right.
investors.
Well, when that happens, let us know. Some of my readers like private placements. They like Rick's rule. Full warrant, 2 years. But obviously, if you can raise the money on tighter terms, you have a fiduciary responsibility to do so. So let us know.
I will.
All right, and good luck with it. Thanks for being a good sport with some tough questions here, and keep us posted.
All right. Well, appreciate your help. Thanks.